Okay, hello everyone. I'm Guillaume. I'm here with Rosalie, aka Crypto Queen. This is Stop Losing, Start Trading, the live trading show we do 3 times a week. We go over the markets, we go over options trade, we try to work our way through strategies. This is again entertainment, so don't take this as financial advice. This is us talking about how we see the markets. What we describe is listened by everyone, including the intern. Sometimes they trade, and then they've been quite successful over the past few weeks, a few months even. And now, again, we'll keep managing these positions. Uh, yeah, we'll do the second half, which is with Brennan, the best and worst trades of the week. But yeah, in the meantime, how are you doing today, Rosalie?
Good, good. I'm quite tired. Permissionless has been really crazy. In New York yesterday, I went to some meme coin events with the Ticker Bitcoin community and the Milady event afterwards, and yeah, it was great. It's so fun to meet
It's in
people.
Brooklyn, right? Industry City. How was the setting, or at least how were the events there?
Yeah, it was great. Some events were in Dumbo by the Brooklyn Bridge. Some events were in Manhattan, and Industry City is quite industrial. There's like big warehouses, so it was really fun.
Were you able to go to the main event or mostly the side events?
Only the side events
Yeah, okay.
this time.
Yeah, no, I think we went there last year too, so you could tell a lot from the vibe. Last year was a bit so I'd say. This year, I think, what was your feeling about the side events and the people overall?
Oh, great. I think sentiment is up. A lot of people are building. I do think that maybe the events had fewer guests, but I think that might just be because there's always so many events happening at the same time. So it's hard to get people in places. There was NFT NYC and the Solana Solstice happening as well. So I think people were trying to
All
manage
the
their.
same time. So the side events, I guess, were probably where you capture a lot of these party goers from all different conferences.
Yes, and next week we'll be in Cannes, in France for ECC, so that'll be really fun as well. And yeah,
Yeah, looking for we're guilty. We're gonna create a side event as well to compete with everything else. But yes, if you we'll probably post about it on Twitter. But if you are at InCon, you want to meet me and Rosalie and the rest of the team, feel free to register. Very excited. Happy to meet everyone. Of course, it's always fun talking about strategies, but also yes, a panoptic. Um, we can skip the markets. The markets have not moved much since last week. We may not even need to manage our positions because it's been flat. But let's jump right back into the interns portfolio, which I can bring up now here. This is the intern portfolio where we have options in several markets. We have ticker Bitcoin options, but also, oh, yeah, there we go. Sorry. We have ticker Bitcoin, but also ETH, Solana trades, a lot of different underlyings. We can look at the money, at the funds we're making. We're up on the week because of the price move a little bit, but then a lot of it comes from that BTC, ticker Bitcoin, and ETH BTC USDC is positive. We lose a little bit on ETH USDC, but that's fine. Any position you want to look at first, Rosalie?
um, yeah. Let's start with the ETH USDC to see what we're losing
Yes. So
on.
this one has three positions open. The last one was 3 days ago, losing a little bit, but we have this juicy multiplier, and it seems like the person buying that option hasn't closed it. So if you remember, we had a position open. Some people were buying it. We wanted to get out of that trade, so we reduced the size the max we could. So whoever is buying now has to pay a bit more. So it's a bit more aggressively forcing them. But if they still pay us, we collected $22 in 3 days in fees on a position that was much smaller than what we started with. So it's a weird trade-off where we have less risk, more returns. This is not something you see often. So yeah, this one is still good. Let's have a quick look. It's a bearish trade, but it's a uh, offset a lot by price moving. It get moved up and down, but earning a lot of fees. We could not even close it still. People are buying the other side, so we're not stuck, but we're earning fees. If it were to go the other way, we would be a bit more worried if it should shot back down up to 3,500. But for now, we're earning juicy fees, so there's not much more to do.
Yeah, no,
Um,
this is okay. Just 1% down in profits at the moment is not too bad yet. and
And what we
use.
just do, yeah, if the price were to go up to 3,000 overnight, plop, what would you do? I guess we weren't able to close it still. How would you hedge that one person that is quite uh, maybe on the lower side?
Yeah, I mean, I would try to definitely figure out a way to hedge that, although I'm not convinced the price is going to spike up that much. So I actually probably wouldn't open a position to hedge that. Maybe just a little bit towards 2,800 or 600. Um, we do have more positions.
Yeah. So again, the max profit is when the price goes down. If it goes up, we have to maybe manage this, but we can look at the whole portfolio, and this one shows you all the payoffs of all the curves of the options, including your deposits. So what one position tells is incomplete. We have to look at the whole story. So on the markets page, we can see the amounts deposited. Oh, this is Helen Keller, Izzy's account. But this is the amounts deposited. This is the utilization. So we can see a lot of information like the IV, but also we see the P&L of the whole portfolio, and we can add the deposits to see. This is a relatively bullish trade anyway. So even though it seems like that one trade could be losing us, combined with everything else, we're still quite kind of neutral to bullish. The max profit at 3,000, it reverts and we start losing if it goes back to 4, 5, 6, 6,000. But that's fine. I don't think it's going to go there. But yeah, that portfolio is slightly different, combines multiple payoffs, but it's what you need to hedge, not each position, but rather the whole portfolio.
Yeah, it looks like we already did. So yeah, I'm not too worried. Hopefully the buyers will close their positions.
Yeah. So and we have one straddle which is delta neutral. One, this is a synthetic long, and this one might be worth visiting because the way this is constructed. Oh, I think we wanted to close it. Sorry. Yes, we're buying a wide call, selling a narrow put. So this is a like a diagonal. It's a calendar spread if you know about options. But we're buying something that is wider, but then we're earning more on the more concentrated side. Both of them together gives you a perp-like payoff, but unfortunately the fees we pay is negative, meaning that we are uh, paying a little bit, and what was positive earnings now is back to slightly negative. I think yeah, we told. Did you want to close this?
Yes, we did want to close it, but on Wednesday it was at 60%, minus 60%. And
I
so
see.
now it's at minus 40%. So
No, I
I
think
think
it's still kind of working against us. So
definitely, but time to close it now.
yeah, time to close it. Or if we can even sell to ourselves here and reduce the price. But yeah, I wouldn't do this because it's also not a position that is yeah time. Anyways, let's close this. Eat the loss, unfortunately, but then we can have now something that is less risky. All right, intern, do your job. Let's close this. Cool. Yeah, so we have other positions to look at. Anyone in particular that you want to maybe highlight?
Yes, well, so before we to decide that, I think since next week we will be
Yes,
traveling and intern might want to kind of de-risk themselves for the next 2 weeks or the next week. And so I'm just curious to see when looking at the whole portfolio, what should we be looking for? What gives us indications of where we might want to de-risk in what markets?
that's yeah, exactly. Because we can look at different markets. The bulk of our liquidity is in the ETH USDC. We have $500 in ticker Bitcoin, and I don't think we need to hedge this again without saying it's not much, but a tenth of our portfolio being at risk, we can leave it on. Same thing with the ratio, it's about maybe 15-20%. I'm comfortable leaving it on, but now we have more than 50% of your portfolio in that one underlying. And yes, I agree. Since we know that Rosalie and I will be out of town, in turn, maybe left to their own device, but then without having them try to trade, we can have a trade that offsets the risks. What I've seen work quite well is, yeah, are you worried about the price going up or down, or what's your main worry about not being able to trade for a week?
Um, I don't know. I think yeah, the price seems to have been quite stable. So I wouldn't expect any sudden moves, but maybe it could go down a little bit. We're already quite bullish anyways. But once we close this synthetic perp like position, the portfolio will look different again.
Yeah,
Also,
it might look a little bit more like this, where there's risks on both sides because we do have one straddle. Now with the deposit, it helps us, but I would say that it would be still skewed, but risks on both sides. So
then maybe, yeah, we would want to make that a little bit wider.
yeah, and you, would you want to remove that risk altogether, or kind of decrease it by a 50% or more, or what's your kind of uh, the again, what we would do likely is to buy an option, meaning that we will buy a put option to protect the downside risks. The magnitude of that protection could be that we lose nothing if the price goes down, or we even make money if the price goes down. So that is kind of the level. But if we were to look at this portfolio, let's say we don't even close the other position, we keep everything on, less risk on the upside. As you said, I don't think it's going to go back to 4K suddenly, and even if it did, it would be in the green. So that construct is fairly less risky on the upside. Downside risk is where I'm a bit more worried. On the tooltip, we see there's 1.6 ETH worth of deltas to be exposed. So that's kind of a number to keep in mind. 1.6 ETH worth of delta. If we go back to 2,000, 1,500, 1,000, we're 1.6 ETH worth of deltas to be exposed. So if we trade, we'd want to nullify this. Want to
Mhm. Yeah, I
trade.
think I would probably not 50%, but like definitely 30% towards the downside. Um,
Yes. So all right. I don't know what so this is the liquidity we can. I would say buying a put is likely the simplest way to do this. And from the available liquidity, there is a lot of liquidity out of range, which is good. We would not buy something in the money like that. We'd only have something that is activated in the worst case of scenarios, and maybe 1,500 was what we had earlier. It's not out of the question, but yes, that could be where we buy a put option to add the deltas. Now we had 1.8 and 1.6 deltas. Now we can imagine reducing this to 1.6 deltas, and that would nullify everything. Let's see if there's a yeah. There's not no liquidity on the daily and okay. So yeah, I would say the way to hedge, the way to kind of manage that risk is to go from that payoff, go to the most liquid strikes, which is the strikes that have the highest bar, and stay away maybe from the at the money, because if the price goes down, you may be losing quite a bit more. If you look here, you lose barely anything if it shoots up. So something that is liquid, something that is uh, picking up deltas as the price goes up, and something that nullifies your trade, meaning that you have negative 1.6 would be what I would do. Uh, if the price goes up, you can even imagine not even paying for that fee, meaning that you don't have anything if the price goes back up to 2,600. It's very, very good as a hedge. You hope you won't need that hedge, but if you have it on, makes you sleep better at night. We have protection on both sides. So the 1.6 could be one way to do this. If we were to hold this for 1 month, we would pay $60 for it. If we hold it for a week, just the premium we would pay a quarter, like 20 yeah, $15. So I'm okay spending $15. This is a glass of aperitif at Cannes. I'm okay with spending this for protection to be able to sleep at night and have no risk on the downside.
yeah, I agree. I think this makes sense, especially if we might not be paying for the option for a while. Is there a way to do this through selling?
No, yeah, unfortunately, selling is adding risk in a weird way. So you need positive deltas, meaning that you need to hedge that risk. The way you add positive deltas is to sell a put. But the way that this works is that I don't know. You need negative. You sell a call. Sorry, you would need to sell it in the money. You would need to kind of have one thing that yes, you neutralize your deltas, but you have more risk on the upside now. Yes, it
It's
looks like so that would be maybe the more aggressive, and adding more risk might not be what we want, because to some extent we don't know if it's going to go up or down. So the delta hedging you do day to day when you can manage, I would 100% go with selling a call option. But the let's set up a hedge that is lasting a week. We don't have to worry about it, meaning that there's no extra risk except what you pay. I would definitely be buying a put option. So going back, you would go to the highly liquid one, size it so that you have all your protection if it's out of range. And this could be, yeah, the perfect hedge. You pay 2% more than Uniswap fees, small potatoes. If I look, this is there's 48,000, which is probably 20 ETH worth of options being sold. So we are a small little fish. We can buy this cheaply. This is great. Let's go and paste this in the chat, because that's the trade that intern will have to do. Uh,
great. Yes.
Chat of YouTube. If you're listening on Twitter, you can type. We cannot respond, but if you're doing it on Twitter, you cannot respond. YouTube, we can respond. So here we go. It's as simple as pasting this link for intern. They have no excuse. They should do it. So yeah, buying 1.6 ETH worth of protection to the downside so that we can all sleep better at night. Even if you don't have an options portfolio, you can buy this protection and also sleep well better at night. Just deposit some USDC in Panoptic. Have this be your warm blanket that will allow you to kind of survive the wild conference that is going to be ETCC. And when you see the price collapse, you'll know you'll be protected and not freaking out, which is what happened at ETH Denver. If you remember, it went down like $400 while we were at this night event. So
Yes, yes. It's better to
hedge your
be
risk.
prepared.
Yeah, we should
For
find if another like a mission statement or a mantra or some slogan about why. Yeah, sleep at night, party at ETCC, sleep better at night. Buy put options. Anyways, very cool. So again,
I think the phrase is always very good to use in this
which
case, but we'll come up with a better
yeah,
one.
exactly. You've again without you've seen it. If you try to talk to perp traders and degens, risk management is not what they need. They have a much higher higher risk tolerance, and they want to see a lot more than I don't know 5% a month. They want to see 500% a month. So, anyways, I think this is it again. Oh, this is the Helen Keller card. Look at this. Yeah, Izzy hasn't been maybe managing, but we have been printing money on this position. This is a straddle that was converted from Uniswap. It's earning a lot. This is one of those best case scenario. It's a weekly option we've kept for 6 weeks, earning fees. Anyways, the market was good again. Past month, nothing moved. It's very stable. So again, anyone that was delta hedged or doing a neutral position had a pretty good month for sure, including Helen Killer, aka Izzy. All right, I think that's it. So again, we'll do that hedge for the intern. They'll be hopefully being able to make is Rosalie and I sleep better at night. And yeah, that's it. So let's go to second half, which is best and worst trades with Brendan. But yeah, thanks very much, Rosalie.
Thank you.
All right, see ya. Hey, I think you're muted, or at least we don't hear you.
That's right.
Yes. Okay.
Thanks for welcoming me to the second segment of the show. We're going to look at the best and worst trades. As many of you know, we have a ongoing trading competition, very exciting in the CB BTC. So that's the Coinbase Bitcoin market for options. So we have a lot of prizes going on, and the contest actually ends in 3 days. And so it's still not too late. I actually put on a trade myself just yesterday. So not too late if you want to join.
And how's the price of Bitcoin trading every trader, you think? There's some choppiness to it, I'd say, but yes, we can look at the leaderboard. But how was your trading experience trading Bitcoin?
Well, I put on a trade and I haven't looked back yet. So one of those too passive Definitely probably losing at this one. It's
No, I mean, if you think about this, you have the ability to not look at it because you know you won't get liquidated, at least if you set it right. If you trade perps, you have to look at it. You cannot even walk away because a single touching of the liquidation price means you're gone. Whereas in Panoptic, you can be in and out of range. It's still on. Uh, Lots of upside potentially, but less management. So yeah, that's an also like a unique advantage of options over perps.
Yeah, no, that's a good point. I remember I put on like around a 50 or 40 delta trade, and so if the price moves, oh, and I looked at my liquidation price, and it was like, um, it didn't
Scary.
show on the chart because like I didn't have a liquidation price that was within $200,000 of the price move, like doubling of Bitcoin, or if the price
Yeah.
dropped like 50%, still didn't have a liquidation price. So
Actually,
I guess
this is a sneak peek. Actually, let me share my screen. It's a local branch. It's not working on base, but we show the marginalization. I know by this account that could be liquidated, but it's kind of small. So if you want to make $10, you can. But now we see everyone's account, everyone's marginalization. So if you're way down there, you're safe. But now if you hover, we can see the liquidation prices. It's a bit buggy, but yeah, that account has a 25,000 price liquidation on the upside, 2,100 on the downside. So you can also, we'll show this for your own account, but we can also see where you'll get liquidated. Now you can do any price, not just with the double, but yeah.
And so,
It's,
how would someone liquidate? Because anyone can liquidate this
yeah.
amount, right?
Now it's the most painful experience, which is you have to go on Etherscan and do it. The
Okay.
liquidation bot has a threshold, so I think this is way not profitable enough. I've done a couple of these Etherscan. Even one a community member messaged me on Twitter, said, "Hey, I want to liquidate." Try to walk them through the Etherscan. We will, and we should have a liquidate button here that will allow this to happen. So we have force exercise and liquidation. We should have this be live, but yeah, very soon. But the thing's gonna break. Yes, exactly. So the way to go is maybe Etherscan, maybe I don't know if the liquidation bot methods are public, but yeah.
Yeah, but I think that's a good example because if the bonus is about $10, the ETH gas fees might be a little bit more than $10. So that's somewhere where it's not really makes sense for a profitable liquidator to take at the moment, but it still hasn't caused any protocol loss. I think it needs to be around close to 130% is what you're saying, right?
Yeah, exactly. And the bonus also scales with the level of distress. So if it's 1%, 101%, you get a tiny bonus. If it's 110, 110%, you have a larger bonus. So it's also a bit more progressive. So there is going to be a threshold for everyone. But yes, the progressiveness means that maybe 120 might be the optimal price because beyond that, there's not going to be as much return. So yeah.
But the best thing for that user would be to just close out their positions right now, right? If since they haven't gotten liquidated. Oh,
I think
you're
they're buying puts. They're buying options or something. So they are slowly bleeding, and that's where it goes up and up every time, every day. I mean, so I would say that the yeah the this account they should close. They would be paying more than what they owe, and they would lose money. So maybe they wait for a price reversal of some sorts. But yeah, I would say that
they're a bit incentivized to hold it and hope their long
maybe
option goes in the money.
that's right. We it's quite forgiving. Same way you it's not like a perp where you get auto liquidated. You have some leeway, but in that case, price could revert. They could be in the money and not have to worry about liquidations either.
Well, let's hope they're betting correctly, or they're going to get liquidated soon. We do have a question from YouTube. If you want to highlight that on the screen, they're asking about the new Hypo Vault that is rumored to be coming out. So I think where this may have been seen is we have a audit. I think do you know the audit details, Guillaume? I believe it's with Code Arena.
Code Arena, I think it's live, or at least it's been something we've been working on for the past few months. Now, if it's live and you're an auditor, you can have a look at it. It's a vault management system, meaning that you can have a very simple vault, which is like a lending protocol where you allocate to different pools, or it could be a ribbon style single strategy vault, or it could be an HLP level of management. So that offering is all within the same smart contract, so it has a lot of kind of range. And yes, we're auditing it. The goal is to have these vaults, these structured products, these kind of capital allocation management like managers be able to help you so that you don't even have to worry about where to deposit, or rather have this be automated. Same thing with calls, and covered calls could be straddles, could be option strategies that could be managed, but you would be a depositor and earn your share of the profits without having to do day to day. I'm teaching Rosalie, and then it may seem like a lot, but if you have someone that's their job, then maybe you're okay with parting a little bit of your returns for peace of mind, not having to worry about it. So that's another trade-off. So yes, vaults, Morpho style, which is passive liquidity, ribbon style, which is very like single strategies, but also hyper liquid style, which is market making vault, will all be enabled by the hyper vault. So we'll have to maybe think of a name. The front end will not have hyper vault, but this is why the smart contracts probably have them.
Thanks for explaining that. That sounds great. Honestly, a win for everyone. I think a lot of people in this space do want a very passive solution, and this vault will provide them those opportunities with various different structured products they can just deposit into and get the APR. So that's very interesting. And then that will also fill a lot of liquidity for those who are a bit more active using the app to trade, because now they can trade against that if they want. They can have more liquidity to purchase options or sell options with more margin. So it's a win for everyone. And why do we need a new vault, given that there's so many different vault contracts that already exist out there?
Yeah, I mean, it's a unique integration into Panoptic, meaning that we can use the 4626 standard for our passive depositors, but whenever we have to involve Panoptic pools, there's like a whole logic that's options that is not kind of ready to go for most protocols. And we looked at like it's based on the boring vault a little bit. So there is a system that allows vaults to be also very, very kind of open in terms of what they can enable. But in our case, if we do HLP vault, which is extremely advanced, we also need to know what the value is of your portfolio, what is the NAV if you want. So we needed to add a few more features that would make the accounting, but also the profit sharing a little bit better, because you can be out of range for a while, back in range. Like the instantaneous price has to some extent an impact. So it's just a options focused vault that tries to do the max it can, but then you can offer everything below that, which is kind of that single strategy, but also all the way down to the passive investment vault 4626.
Awesome. Thanks for sharing the details on that, Guillaume. Hopefully that answered your question. If not, feel free to leave comments in the chat. We're live on YouTube and X right now, and we stream every Monday, Tuesday, Wednesday, Friday. So let's get into a bit of the Bitcoin trading competition. We're going to go over some of the best and worst trades. So just to give a quick overview of the competition. So we look at the Bitcoin chart here. We've seen that we've been pretty stable in the last week. We did see a big jump earlier at the beginning of this week. I can't remember what this is attributed to. I think the ceasefire potentially that was affecting global markets being announced. And then we've kind of seen a steady.
Yeah, if you go like maybe 7 days, or it's restored to where it was. Yeah, it's a very transient.
Let's see, 7 days would be
Twitter post fueled price move, I guess.
Yes. So we can take a quick look too at the leaderboard here. So these are the prizes that we'll be giving out. So the winners will be announced shortly after the competition ends, which is in 3 days from now, and 25 minutes and 5 seconds. And so we've got the leaderboard. So we have 2 leaderboards, one for the profit and loss, or P&L. And we see that the current winner is standing at nearly 8% gain on their portfolio. And then we have prizes for the top 50. So even, there's something here for everyone. So 30 people won't get anything, but 50 will. And then we have this nice volume leaderboard where we show how much volume is being traded. And it looks like we've had someone overtake what was the best volume
Ooh.
in the past.
Yeah.
So a little bit of competition heating up here for this Michael Saylor pillow that we show here. But yes, we got some big prizes here for everyone.
Very exciting. Yeah, the volume metric is that like you're putting yourself at risk a bit more. You can trade, but then someone can buy the options, sell the options. So it's also a different way of earning some cash rewards, but also fancy pillow. But yeah, I mean, if we were to look, I don't know if that's the best trade, but I would imagine that the top trader on the P&L side probably has a one or two trades that went for them. But yeah, I'm actually happy to see someone being pretty active there.
Sweet. And yeah, we can take a quick look. Anyone can do this on the UI because everything's on chain. You can find Andrew Tate's hidden portfolio here somewhere. And you just click on the user on the leaderboard. You'll see that there were these positions opened, when they were opened, how they're doing currently. So yeah, they've had some liquidated positions.
What?
Interestingly enough, they have some open positions since. I'm not sure.
That's interesting. So this is ETUSD or CBBTC?
Yeah, this is the CBBTC one.
Interesting.
So despite being liquidated,
Yeah.
they do have some big gainers that they closed this
Yeah.
week, and they
Very
still have
cool.
some.
Yeah. So this is, I think, like the three trades that are open are put options being sold. This is kind of somewhat neutral. You see that the Streamia is exactly what they're earning because they have a $60, $68 P&L, but it's 50 coming from Premia, so it's very, very Premia harvesting. So they benefit a little bit from the price, but it's mostly the Premia that is great. But yeah, this is actually very interesting. They are high utilization as well, so maybe that why they got liquidated earlier. But yeah, they have a quite high. I'll have to check. I'm not sure if liquidations are part of the P&L calculation or if it counts as them being closed out. I'm not sure, but this was definitely during the competition that they got liquidated.
Yeah, we might have to investigate this one a little bit more, but interesting enough. So we will jump now to the best and worst trades that took place over this last week. So any trades that were opened since last Friday, we're going to look at now. And we're looking at the best trade and the worst trade in this Bitcoin competition. So as always, we like to play the guessing game where Guillaume guesses what he thinks might have been the best and worst trade. So we're going to take your guesses of what type of option strategy might have yielded the best and worst trade in Bitcoin.
So this is strategy that was open in the past 7 days or just any strategy? Yeah, I would say the capitalization on that down to up move probably meant that put sellers were ahead. I'm not sure if there's a lot of calling, but yeah, I would say put seller as the best trade and a straddle as the worst trade. Let's spice it up.
Long straddle or
short straddle?
Short straddle. Selling a straddle. Okay. So let's go to the best trade then, which you said was selling a put option. So we'll share the screen here. So the best trade was actually a long option. So someone bought a call option just 5 days ago.
Yeah.
And it looks like at that time, that was, earlier this week, the price was hitting close to the 100K mark. But then it rebounded back up to 107 right now. This position is still open. And so they did start at a lower delta here. And they're at a much higher delta now. So they're gaining faster as the price continues to move up. And they've only paid $5 in premium fees, but they have accumulated a much higher amount, about $25 in just the price moving. So that leaves them with a 20% P&L at the moment.
Congrats! Yeah, well timed. I would say that the again, market being what they are, but yeah, if you wanted to capitalize on that reversal of whatever price of Bitcoin was, yes, this is the best way to do this. So yeah, very cool.
Awesome. Well, just shows there's a lot of profitable option buying strategies lately. I think we have a lot more liquidity here as we see.
Yeah, I mean,
Um,
and you pay a little bit, but that's funny. Again, you can have a lot more upside as well. If the price keeps going up, you can imagine that the profits could be even higher. So it might be fine to pay $5 at the end of the day because you can make like, yeah, 16, 20, $30. So yeah, very cool.
all right. Well, let's go to the worst trade, which you said was potentially selling a straddle. It is also, in this case, actually a long option. So someone purchased the
Oh,
opposite, which is the put option. And this happened 3 days ago. Since then, the price of Bitcoin has actually risen just slightly from when they bought it. So they bought it when Bitcoin was 105 approximately, 105K. Bitcoin is now 107.4K. And
so it's
they,
still open. Yeah. I mean, it's a sizable trade as well. So, I mean, the it's like $6,000 worth ish. So this is kind of a big trade. So yeah, it might look bad. It's 12% down, but yeah, because the trade is so big, it's a quite interesting one. Interesting. Yeah, buying options works one way, doesn't work the other way.
that's right. It's much more directional. It's not as directional as perps. Their delta here is 41, which means they're losing a lot less than a perp would lose. Perp lose 1 for 1, or on leverage, 20 for 1. Here it's losing 41 cents for every dollar instead of a dollar for every dollar. So, but still directional as we see here. All right. Well, that is the Bitcoin best and worst trades for this week. As a bonus for this segment, we wanted to cover the best and worst trades on Ethereum mainnet in the ETH USDC pool. So real quick, we'll take a look at just the ETH price going on here over the last couple of days. So we see a similar price movement, started out low a bit, and then some macro news bumping the price back up to lower than where it started earlier. But we are floating around 24.
No, yeah, if it goes 6 months in again, I think the past few months have been quite stable, which is great for a neutral option seller. Almost like the yeah. Anyways, we'll see.
So then, given that news of how the markets have been doing, what is your guess? Are you going to guess the best trade is a seller, or what's your
No, yeah,
strat?
I think the if you remember earlier this week, or maybe last week, I said like, yeah, I'm scared that I'm going to reduce my size, and then there was indeed a move, but it went back to where it was. So I'm also kind of on, especially when I'm going to ETCC, I'm also maybe de-risking a little bit. I would still be selling. I would still be somewhat neutral, but I would control how much maybe I have to lose. What we're seeing in the ETH USDC markets that you can buy quite like a large amount of options now. There's a lot of activity, and you can imagine reducing your risk. Maybe not nullifying it totally, so that's going to be not expensive. Reducing your risk if there's a reversal where it goes back to 1500, or if a extremely bullish announcement happens, it goes back to 4K. As an option seller, you can get squeezed on both sides. You can lose if it goes up, lose if it goes down. You benefit the most if it stays stable. So I would say that I would maybe buy a few options, the same way we've done earlier with the intern. I could do it. Could be a yearly option as well. You have like super wide protection, and that would be kind of the. I don't have the throughput to trade between events, so I would just keep my position on, but then add protection on top.
Yeah, we actually do have some questions here in the chat about this. So maybe you can bring up
Yeah.
the question. Very confusing. Buying, selling options, long, short. I've already been learning long means bullish, short means bearish, but that's not so the case in options. From an options 101 perspective, what's the kind of profile of buying options, and what's the difference for selling options?
Yeah. And puts and calls, like even though names like are weird to remember, and then buying a put, selling a put. So that's why we created the interface to be a lot more visual than what you'd expect. So that you could somewhat play around with it and see the payoff. And then you don't even need to know this is a long put. You just say, this is how my profit looks like. So again, I would also like be uh, thinking in terms of buying versus selling is now different than directionality. And the main maybe way that you could think about is that if you buy options, you are potentially having a lot more profit potential. You have unlimited potential actually, and limited risk. This seems too good to be true. You buy or you pay something for this. So whether you are bullish or bearish, the buy and sell might be the most important distinction to make. And again, maybe the next one is like, how would you get started? That it's just starting of, are you bullish or bearish? And also, are you willing to get a lot of upside for maybe a cost, or you get paid something more steady with the more high, like the higher risks on the other side. So if you get started, if you want to be an options trader, I would start on the buy side. It's a little bit easier to manage, a bit easier to kind of understand the risks. And if you're not, and then I think you're sharing, but yeah, the the way you see this, I would start with what you think is the price going to go. Start with the buy side, and then go from there. Test it out. If you do this as a career, if you do this as a way to manage your wealth, as a way to kind of be long term profitable, there's a slight edge on the sell side. But unless you're comfortable with the whole kind of system, I would try buying options. Same way you can be directional with perps, can also be directional with options. And then from there, have a price target in mind, buy an option, have some profit that you can realize with less risks, and get started there. So could be a trading competition on base where there's no gas fees, and it could start with as little as $100. But I suppose, do you think the price is going to go up or down on the Bitcoin? And then you just create the payoff that looks like the one you want.
Yeah, and I might remember wrong, but I think when I was looking at like Fidelity or some brokerages options onboarding, you kind of had to unlock more, I don't know, like education before you could even sell the options.
Yeah.
And so they kind of start you off with buying options, which are much more simpler. They're much more like perp-like, I guess. So as Guillaume said, you get this kind of nice, almost infinite exposure. If the price goes up, you're gaining a lot. But the nice thing about it is you do have this kind of safer downside. If the price goes down, you're kind of limited in how much you lose. Unlike perps, where we can actually pull up a perp thing here.
The strategies hopefully like also make sense, bullish, bearish. But yeah, the beginner should also kind of not go too deep down that strategies list, because some of them are a bit more advanced. And unless you know how to manage them, you're going to have like put ratio spread. How do you, so that like there is some level of kind of reasons for each one. But as a beginner, it's much easier to get started with one, a directional assumption, and two, like the max loss that you're willing to pay. And then that's going to change your risk. But yeah, in that case, you have, and like all of it can be lost if it goes to zero. All of it can go up if you go up. But yeah, if you have this call and put option payoff, you have a little bit more control and kind of risk management that exists.
Yeah, and I love starting out small, because on a lot of brokerages, I think you have to trade like full contracts, which is like 100 underlying shares. Lots big size. Here you can put in $1 and pay off tick.
I know. It's so crazy. Yeah. For a while, like Chipotle makes a great restaurant. Their stocks was like 800. And that meant that your notional size, you created one option, you had to pay like you control, is it 80K? Yeah, $80,000 in a single contract. And then it was more than that. I think it was like $1,000 per shares. Even Google for a while was $1,000. You have to like have 100K for one contract. Cannot go smaller. Even Tesla, even S&P 500, it's like 50K. Like you cannot trade this efficiently. So yes, we allow any contract size, start small, but yeah, make sure you don't lose more than you're willing to. But the fact that we have no restrictions on this means that you can trade quite well on base and Unichain, low cost, be able to kind of figure out the system like with no gas pressure.
Yeah, you even get like gas rebates sometimes on base. So put in a trade, you get your 1 penny back in ETH. It's a great way to learn. I do like the visualness of it. I think it's probably the fastest way to learn, as opposed to reading books or courses or going to class. It's great to really get hands-on experience. Try it out with some small amount of funds that don't really matter as you're learning. Even as small as $1 or $5 or $10, whatever you're comfortable with, try it out and you can get rewarded. I guess to participate in the trading competition, you do need to put in a minimum of 100 But if that's something comfortable with you, then it's a great playground and time to experiment. So we do have some more competitions coming up, which we'll announce here shortly as well. But let's go to the best and worst trades on Ethereum mainnet. So we're going to take a stab. Guillaume will guess what the best trade was and the worst trade was on the ETH options market over the last week.
The landscape of traders on mainnet is less speculative and less buying, I'd say. So maybe I'll revert back to my initial option. I would say that the biggest winner is a put option being sold, and the loser is a straddle that went in the money. So exactly the same prediction as before, but now on mainnet, I think I have a slightly higher chance of success.
All right. Yeah. When you get it wrong, you have to double down. That's I don't remember which sizing principle that
is. Texas hedging. Yes.
Texas hedging. Love it.
That's how you do it. Yep.
Okay, let's take a look here at the, we'll go to the best trade first. So you're halfway there because you did say selling a short put. And it looks like the leg that was in the money, or sorry, out of the money. So it started at 24.41, and then it's currently at 24. Sorry, it started at 24.06, and now the ETH price is 24.41. So the price has moved slightly up, and so we're actually kind of near the money still. This price hasn't moved too much, and this being starting out as a mostly delta neutral trade means it kind of absorbed any of that price movement there, or at least a lot of it. So we're starting around zero delta. We're now currently at, I guess the combined delta here would be, you would add these up, right? So you're at closer to a 40 or 50 delta now.
Yeah, you can hover with your mouse, and I think the tooltip will tell you. Oh no, yeah, it's in
not in terms of percent.
Yeah, exactly. Yeah,
minus
so
10 ETH delta.
Yeah, so you are like 40-ish%, and so this is a good trade. 3 days ago was opened. It's a daily trade, so this is what we've seen sometimes, that when you have a monthly trade, you can close it ahead of time, but we never keep it past that much, like 2 months, 3 months. We don't have time to wait. But if it's a daily trade that works for you, you can keep it on. In that case, they're realizing quite a bit of profit from pure fees alone. And I don't know what's the percent return on the fees, but yeah, 7% in 3 days just on fees, $2,000. It's a huge position. Don't need to eat. So yeah, you just have to have enough collateral, but it is like a zero DTE that keeps on paying every day. So in that case, if they go out of range, they're still kind of earning. So it's actually pretty cool. And I would imagine that if you're even more sophisticated, you probably have hedged this. Could be somewhere else in your portfolio, or somewhere like it could be a centralized exchange. But now you just get paid quite a bit while it's in range, and then you can have a hedge that says you don't lose as much if it's out of range. So yeah, it's actually pretty good.
Yeah, very juicy trades and a lot of liquidity because no one's buying this up yet. So if you wanted to buy a zero DTE option, it looks like this is kind of your counterparty. So
maybe the hedge that we need is buying like a zero DTE. So the way that this works is that the time scale of your position is how long the price should stay within that range. And this is maybe the anomaly, but now 3 days in, we're still in range. If I look at statistics, a week from now, I could be somewhat confident it's going to be out. So I could imagine even this being a hedge for you go to ETCC, you don't want to look at it. Now you have, unless the person closes it on you, but you have some level of, and a week from now, you have more chance than not it's going to be outside. So that could also be a hedge where you have a at the mini straddle that you buy on the daily and then keep it on for multiple days.
Well, very, very interesting. So this is the current best trade on Ethereum mainnet. Let's move to the worst trade then. And I believe, remind us what
straddle again. Yeah, straddle. Selling a straddle as well.
Selling a straddle. So, I mean, it was the best trade. So let's see. Well, we are kind of the inverse. So buying a straddle has been very, very bad. So someone bought a week-long straddle just 4 days ago, but they closed it within 3 hours. So I'm a little surprised why they closed it so fast.
Yeah, because the price went against there, and then they were probably like worried. They paid zero stream. Now this is effectively a short, and it was
Okay.
a like we now look at the collateral requirement as the basis. So they had only to put $1,000 worth of collateral, but this position is actually like 9,500. So it is somewhat kind of hefty, and yeah, the price moved the wrong way by more than $100, and they had to eat, so they lost $200 very quickly. Had they kept it on, I think they would have lost more. So this was maybe the right trade to do because the price is definitely going back up, but it's a um extremely bullish, bearish trade that was put at the bottom. So I would imagine that anything that goes up means that they lose.
I see. So this whole time, did this call option league do anything technically to impact their?
No, and then even the put option never touched the range, so they paid zero. They had a synthetic short with a 0% funding rate. They lost on the price move, but not on the fees.
Very, very interesting. Okay, but yeah, I guess it ended up being a smart stop loss because they would have lost a lot more if they had
Yeah,
closed it. But they closed it while the funding rate was zero, so at least they didn't have to pay any additional funding
it's
there.
weird that the price at mint doesn't show there. So it was even on a single
Oh,
candle, maybe.
yeah, that
So
is
we do our hourly. So within that hour, even maybe the mistimed it so badly that the lowest point of that hour and the lowest point of that day, yeah, this is when they opened it up.
right because it would have been around June 23rd. So it looks like the price actually went a bit further than here,
Yeah.
bounced up. Then they closed the position. So very interesting trade, but also a good setup here because if it looks like they were mostly betting on the price kind of just dropping there and basically paying a zero funding rate. It went the wrong way, so they put a stop loss and closed that out.
Yeah, it's like catching a falling knife. Literally, they wanted to capitalize on the price movement. They probably paid a bunch of gas too. It was probably a very volatile time. So yeah, unfortunately, it didn't work out. Maybe if they opened it a few hours earlier, that would have worked. But yeah, unfortunately, not this time.
Yeah, yeah. But overall, interesting strategy. Just didn't work out in this environment. So we always have to put a disclaimer. Nothing we say here is financial advice. Please do your own research. But this was great analyzing the best and worst trades on Panoptic. We've seen a variety of option trades here. Hopefully, these segments help you kind of better understand these buying and selling strategies, which can get so confusing sometimes. But seeing examples is really helpful for me. I'm a very visual learner, so I think hopefully can help you get started as well. So we do have a trading competition ongoing that ends on Monday, 17 o'clock UTC time. And then we will be announcing a new trading competition with more details to follow. That will kick off on July 7th. And we'll have more details before then. But yeah, so we're looking forward to it. Monday, are we doing a live stream on Monday? When's ECC? I think you're muted.
Yeah, I'm not gonna be there. I think so. We'll figure it out. Maybe you and Rosie not, but yeah, and then you're doing something special on Wednesday as well. So Monday, we'll let you know. Maybe not, but yeah.
Cool. Well, we'll see. But stay tuned then
Yeah.
for the announcement of the winners. And best of luck over the weekend. Every time I say it, I hope nothing goes crazy on the weekend, but maybe things will be very volatile or maybe they'll be quiet. So any advice for Panoptimists through this next weekend or any updates or announcements you want to drop before we end the
No,
stream?
again, manage your size. Don't overextend yourself. Trade in longer dated options if you cannot be around. Maybe hedge a little bit, but overall, like we're not advocating for these degen strategies in the live show because they don't quite work unless you're kind of doing this full time. So we want to show. I mean, the hyper vault will make it even easier, but show an easier way to invest options, which is not in and out within a day, but rather in and out within a few weeks or even a month. So that's just kind of a different way of thinking about investment and trading. Yep.
Awesome. Well, let's cue the music. And this has been Options Hour. Stop losing, start trading. We cover the best and worst trades. So stay tuned next week. We'll have some more fun shows for you here. And if you have questions, we appreciate everyone who participated in the chat today. You can drop them live here every week. Also join our Discord and our Twitter at panoptic_XYZ. So stay tuned, and we'll see you all next week.
All right.